Okay. So as far as general announcements, I don't have much. I think everybody's kind of figured out the basics of how the course is laid out. Other than to say, we have the exam that is due tomorrow by midnight or 11:59, not midnight, 11:59. That's Idaho time, Mountain Standard. Also, be aware next week. So this Sunday we have daylight savings change, which weirdly for you guys, I guess, it probably all live in places unless you live in Arizona or Hawaii that do daylight savings. But what that's going to do is it's going to impact how this meeting is at your time, because I can't change my meeting time because I have another class immediately following this and I have work right before this. So I have to stay at 5 o'clock Arizona time. So starting next week, then I think that will be 6 p.m. Mountain Daylight Time, or Idaho, Utah time. So I'll post that too, but I just kind of let you know that, and that's only because because of my work schedule, I have a limited time I can do this, and that won't change even though daylight savings does. If you ever meet someone from Arizona, they're almost like they're super proud of the fact that we don't have daylight saving times. It's like this rebellious sort of pride in it.
Well, that's because daylight savings time is stupid.
That's correct.
As a fellow Arizonan.
Okay. Yeah, no, it's a funny thing. Like everybody from Arizona, they'll tell you exactly that, like with derision, what a stupid thing it is and how smart we are that we don't have it. Anyway, yeah, it's a weird pride thing. Because
well,
you can't.
I lived in Utah and Idaho for about a decade for my husband's work. We lived, so I had to do it for about 10 years, and the whole time, every single time, I went, why on earth do they do this? So
because if you cut an hour off the beginning of the day and you sew it on the end of the day, you still got 24 hours, right?
Yeah.
It nets the same anyway. So again, any questions or things about general stuff for the course right before we get into maybe looking at either specific problems you were struggling with or specific questions about the exam? Bunch of specific questions that I have to dodge and can't fully answer, that sort of stuff about the exam. I will do my best to answer. Okay, so what do you think? Would our time be better served by looking at, I just drew a blank on what we're covering this next, starting on Wednesday after the exam. I think it's chapter 7. Okay, sorry. I should know these things. So taking a look at chapter 7, or would it be better to maybe look at the exam review and maybe just walk through that and answer any questions you might have about concepts on there? Should we do that?
I would like to do an exam review. I think, okay, just being able to go over that would be beneficial.
I'll second that motion.
Okay, well then we don't even have to vote. We'll just do it. There's no Robert's Rules of Order in my meeting. Oh, no, I'm just kidding. We do that at work all the time, and I always feel like it sort of stifles good conversation, because it's like you cannot have discussion until it's been moved and seconded. Anyway, so like just throw it out there if you got something. Okay, I have something to say though. I don't know if you've ever heard of the Follow Him podcast that like John By the Way and Hank Smith do. If you don't usually listen to it because it's incredibly long, it's like 2 hours every week. This week's is really, really, really awesome. So if you don't usually, but every once in a while have, like, check it out. I think this week's is really strong. Just talks a great deal about adversity and all the sorts of things we all struggle with. And the lady that they have as a guest is really incredible. She's like a clinical psychologist, and usually they have like Old Testament scripture experts, but this week I don't know why they had her, and I was skeptical at first, but she made a believer out of me. So I'll just throw that out there. I know you're busy and like a 2-hour podcast. I listen to it while I'm walking so that I can try to improve my mind and my spirit and lose this gut. But maybe 2 out of 3 ain't bad. All right, so let me pull up. Where is it at? There it is. So I'm just gonna share my screen. Let's see. And I'm gonna go to modules. And I'm gonna go to
Hey, well, while you're looking that stuff up, what episode was it? Saturday or Friday?
so will they do like a part 1 and a part 2.
Oh, okay. So both of them basically.
Yeah, and they're like I said, they're each like an hour usually. So I know my wife got into it and I was like, false. I'm not doing like 2 hours. Like trying to sell this to my teenage kids has been a hard sell. But for me, like if I listen to the first hour, then I want to continue on into the second hour. So yeah, so I'd start with the first episode of the week. They're really good. I'm gonna try to convince my adult children to check it out and maybe pick out 15 minutes and see if I can get my teenagers to hear it. But my daughter on a mission right now, she listens to it like religiously. I guess it is religiously. And she's like, man, if you tried to get me to spend 2 hours listening to something my senior year in high school, that'd have been a hard pass. So she's growing up a little. Let's see. So chapter 3, exam review. I don't know why I scrolled down because the exam reviews all linked to the same document because it has all the chapters. But nonetheless, I did. So, all right. So let's just take a look at this. Again, the other day I was helping a student and like he had no idea this was here. So that's sad because I think it's been really helpful to a lot of people. So it tells you a couple of things. It consists of, it tells you how many questions are on it. That's exam 2. Exam 3, all right, covers chapters 4 and 5. So I guess we could start with this first bullet point because this was actually a question the student yesterday had for me. Let me see if I can make it more bigger. All right, so the difference between a multi-step and a single-step income statement. And then of course they give us these 2 examples and the one's like ridiculously simple. So really the big difference, okay, is that all revenues and all revenues are lumped together and all expenses are lumped together on a single step income statement. Okay. Whereas on a multi-step, you're going to have your gross sales less any returns, allowances, and discounts, which will give you your net sales, your cost of goods sold. So net sales minus cost of goods sold will be gross profit, and then operating expenses. And then, but the big tell, okay, because if you had a service-based business, they might not have a like cost of goods sold still. So the big tell is this section that has like other gains and other losses. So in a single step, we just consider all revenue together and all expenses together. But on a multi-step, we're trying to recognize that some of our revenues may not be operating revenues. A good example, my personal business, that we actually sold all the assets of the business, but we've left the business intact. It's LLC because we carried the note. So we used to be in the business of renting storage. So our operating income was all through rental. But occasionally if somebody got way in debt to us and couldn't pay us off, we would turn that into a note so that they couldn't pay us the full amount, but rather than sell their stuff, we'd say, hey, you can pay us this $1,000 over the next year, and we charge them interest. So we'd earn interest revenue. That wasn't part of our normal operating experience. Like we weren't in the business of lending money to people, but occasionally we would earn interest revenue. Now it's the only kind of revenue we're earning at all because we've sold all the assets of the business and carried the note. So that's the difference is in one, if I did a single step, I would have my rental revenues and my interest revenue all together up here. Where on the other, I would say, no, the rental revenue is my operating revenue and my interest revenue is an other revenue, not part of my normal operations. Does that help?
They would still be listed though in like, it would say revenues and then it would say rental revenue, interest, like it would still be listed individually on
Right.
the step, right?
Correct.
Okay.
Yeah.
Just with
Yep.
each other.
Right. All right. So with that then comes figuring out how to calculate net sales, right? So net sales means this says gross sales. A lot of times it won't say gross sales, it will just say sales or sales revenue or something like that, or merchandise sales, right? That's one of the first things you figure out in accounting is like, they have 5 different ways of saying things and I'm just expected to somehow know them. And it's like, yeah, that's like learning a foreign language. Like they teach you how to say a certain thing and then that's not the way everybody laughs at you because that's not the way anybody actually says it. Anyway, so to compute net sales, all we have to do is take our sales or our gross sales minus our sales returns and allowances and our sales discounts. That easy. And then to find our gross profit, it's just our net sales minus our cost of goods sold. Gross profit just means our profit before expenses or before operating expenses. Okay. And then income from operations is just our gross profit minus our operating expense. Okay. So, I mean, I know that's probably pretty obvious. I hope I'm not wasting your time by walking through that, but what I'm trying to do is like take something that might seem complicated in your brain and say, no, it's actually pretty simple. And so if you just, if you kind of understand what a multi-step income statement is and how it's laid out, then you'll be able to compute all these things and you'll be in good shape. Let's see, gross margin ratio and the profit margin ratio. So that's just your gross profit divided by your sales. And actually, do they want you in this book to have your gross profit divided by net sales or by sales? I'd have to look at the book. You need to look at the book and double check that because there's a difference there. Let's see. And then this right here, whoever wrote this says, put to memory the following formula for computing total cost of goods available for sale and cost of goods sold. In other words, and I've looked at the exam, like really, really get this down. There's going to be multiple questions about this concept, okay? Which is that our beginning inventory plus purchases plus our freight in or our cost of getting that inventory, less any purchase returns and allowances and less purchase discounts is going to give us our cost of goods available for sale. If you think about it, that's like saying the stuff we already had plus any of the stuff we bought during the period plus all the costs of getting it to us minus any discounts. That's going to be the cost of the goods that we have available to sell to people. And then if we subtract our ending inventory from that, that'll give us our cost of goods sold. Okay. Again, I grew up in a store doing this, manually doing this. We would do this manual count. You can see it says manually counted right here. And then we would use that manual count because we would just keep track of this stuff. We knew our inventory from the last period. We could keep track of our purchases and the cost and any discounts or allowances we got on it. And then I would manually have to go out there, count the inventory and calculate the cost of goods sold for the year. This says review the summary cheat sheet located at the end of chapter 4 in the textbook. If you guys haven't noticed that or seen that, it's really good. I think I mentioned it in one of the earlier, one of these earlier videos. In fact, I'm going to go here and just show you what I mean by it, because these little cheat sheets are good. I don't like the term cheat sheet because, well, we don't want to cheat. We want to. It's a learning sheet. I don't know what we'll call it. An opportunity sheet. I remember at our high school when they stopped calling it detention and started calling it opportunity room, and I was like, that's baloney. Okay, just call it what it is, people. I mean, I realize they're like trying to be like, this is an opportunity to grow, and it is, but come on now. You think a teenage kid's going to buy that? Let's see. Let's see. And summary cheat sheet at the end of each chapter. It like just breaks down, well, all the stuff from the chapter, including purchasing merchandise for resales, paying within the discount period. It gives you all these like journal entries that you would expect to see. Just good stuff. I think I did the wrong. I did a different chapter, but I was just. Oh, that's right. That's chapter 4, right? Yeah. Sorry. Anyway, so what the person who's put together this, where was that? All right, my son's calling me. All right, so the person who put together, I just can't find where I was at. Did I had that up? Was it? I thought it was a PDF. I'll just go back to it.
I think it's the Google Drive.
I got too many tabs open.
The next
Where?
exams review.
Oh, there it is. Thank you. My wife's like, how can you work with all those tabs? And like, of course, I play it all cool. Like, well, you have to have an incredibly large brain to handle all this. But the truth is, I can't. Right? I needed someone to explain to me which tab to click. Anyway, so the person who put this together is telling us, review the summary cheat sheet located at the end and put to memory the journal entries that are to be recorded for merchandising purchases. And then review the summary and put to memory the journal entries that are to be recorded for merchandising sales on account. So, again, to me, that's very pointed direction. And I noticed that behind it, they put a watermark that says urgent. I don't know if they did that on, like, if we were supposed to notice that and be like, oh, these guys aren't messing around. Anyway, I think an important thing to recognize is when we sell stuff, okay, that there's always 4 items in that journal entry when we make a sale. I think a lot of people miss that because most journal entries are 2 items, right? But when we sell something, we have to have this, I call it the cost transaction at our cost as the seller, and then the retail transaction at the retail price we're selling it to the customer at. And so you'll see here, like if we're selling merchandise on credit, we're going to have our accounts receivable and our sales. Sales is a revenue account, and accounts receivable is an asset. So this is what we're selling it to the customer for. So we're recording revenue of 1,000 and that we're owed 1,000. But then we have to do this second little entry where we record our expense. That's the cost of goods sold and the reduction in the merchandise inventory. So this portion is listed at our cost. Whoa. And this portion is listed at the retail price we're selling to the customer at. I think just remembering that helps a lot of people because we tend to think journal entry, there must be a debit and a credit. Nope. For selling merchandise, there's going to be 2 debits and 2 credits. So he tells you to review I say he, it could be, I don't know who put this together. Just so you know, like most accounting teachers are male. I don't know why that is. Probably do actually, because women choose careers that are not as lame as the one I chose. Okay. I'm married to an artist. Okay. And for her, this is just pure pain for her. But also painting a giant mural is pure pain for me. I just watch her and think, that's not going to turn out. And then it turns out and people pay her money to paint and she's happy. Anyway, so again, they're kind of reviewing all those journal entries. So even though they tell you to go look at it, they also give you the stuff right here. So that's pretty good. So be able to compute a company's balance in the inventory account as of a point in time using the perpetual method. Also, let's see. know which costs are recorded in the inventory account and which transactions can reduce the inventory account. So like recognize this, when I buy stuff from my supplier, any cost of getting it from the supplier to me is going to get added to the inventory account. That sometimes freaks people out for some reason, like it like breaks our brain or something, because we're like, that's not inventory, that was the cost of the, you know, the freight. But that cost of the freight is part of our cost of the goods that we're going to be selling. Okay. And it especially breaks our brain when we sell it to someone. And if we pay freight for that, we're like, no, we're not adding that to the cost of the goods, because when we sell it, it's no longer cost, it's not part of the cost of goods. Cost of goods is part of us getting it and making it available for sale. When we sell it, we just usually charge that as freight expense, as a monthly expense. That's pretty standard, but it can be confusing. Let's see. So understand the terms, like sales terms, 310 net 60, or 310 N 60, which would mean a 3% discount if paid within 10 days, or full amount due within 60 days. And you'll see 110, 210, 310. Those are all pretty common real life scenarios. And then this N60, you'll see probably N30 is the most common. That means they expect you to pay within 30 days. Net, and then net 60 is second biggest. I've seen all the way up to 120. Some businesses will offer 4 months of interest-free financing in essence, but that's pretty rare, especially now. People want cash, or they want to get their money quickly, which makes sense. Here, a couple more ratios. Acid test ratio in the so what's hard about acid test ratio is that's your, you know, your quick assets divided by your current liabilities. And so figuring out which assets are quick assets can be confusing. And I'll be honest with you, in real life, it even varies from place to place. And what I mean by that is some places have, like I call like an additive. They'll say like a way of figuring out what are their quick assets. So it'll be like cash plus plus marketable securities plus, you know, they'll list them out, and then others will just be like, it's all of our current assets except, you know, our prepaids and our, you know, so use what's in the book. I off the top of my head, I don't even know, but I bet you if we looked in here, it would have it for us.
Cash, accounts receivable,
But
prepaid expense, accounts payable.
okay, yeah, so that's, yeah, so they're using what I like I said, an additive way of thinking about it. We're going to include, or an inclusive maybe way of thinking about it, we'll include these counts, right? I think it would be on this little cheat sheet somewhere.
It's under QS 419. It might be.
Anyway, so make sure you use the formula from, you would think it would, but make sure you use the formula from there in the textbook, so that you know which are your quick assets. And that's what you need to compute your acid test ratio. I think it sounds cooler than it is, like acid test, but it's not that cool. Anyway, days sales and inventory, and inventory turnover ratio. Again, use the formula from the book. I know it's a lot to commit to memory. I don't love that we have to memorize all these things, but that's not something I have control over either. Like I'm never in real life, when I'm doing real accounting work, I'm never asked to compute any of these things without resources, right? And if you don't compute these all the time, like, then you don't remember the formula. In other words, most of us as accountants work in like a pretty thin slice of it, and we do that over and over. And so we're really good at that. And other stuff we still have to occasionally be like, look up. And like ratios, no one computes them by hand. You just, like, if whatever software you keep your company's books in, you can just be like, run reports, and it will spit out the reports. That being said, I do believe it's important for us to learn in a beginning accounting course how they're computed, even though so that, like, now when I see a summary like page with all those report numbers on them, I can I know where they come from. You know, even if I'm like, wait, is that the average of the inventory, or is that the, you know, anyway, so there's value in it. It can be frustrating at times when you're like, why are they asking me to memorize so much stuff? Urgent watermark again. So This is urgent. Feel it.
So Brother Fox,
Yeah.
is there a way that we could petition whoever it is for future students' benefit to say, why do we need to memorize all these?
Be aware that many online instructors have petitioned on behalf of students for many years now, and they're not negotiating on this point. So in other words, I mean, you could email, the accounting division chair and say, hey, just took this course and I don't think we need to memorize all this. But just, I mean, know that many of us, because most of the online accounting instructors who are not full-time faculty at BYUI, most of them are actually CPAs who are working as accountants. And they're always going like, why do we have to memorize this? And that question gets brought up at every course council every time. And I really think the answer, although they don't say this exactly, but because I teach this, I've taught this at 3 different colleges, the same course. I think a lot of business programs see accounting as this is a term that a gatekeeper course, if you've ever heard that term. It's like to weed out students who are not serious. They're a weed out course. Nobody likes to admit those exist. Calculus is another one. Like why would a business major need calculus? But it's to make sure students, the serious students only are doing it or something. And again, nobody says that, but I think that like there's this mindset that the course is supposed to be challenging, and so we're going to make it challenging. But I will tell you, I think I could tell you this, that on the final exam, there are no ratios. So there's no expectation for you to have them all memorized when you do the comprehensive final. So that's something. Maybe that came from all of our crying over the years.
Yay, that's me celebrating. Thank you.
Yeah, but then it's like, we still have to know them for now. All right, so let's look at chapter 5, the info here. And again, don't be afraid, like Marta did there, to jump in if you have questions. Like if you use the little hand raise thing, I always miss it. And then later someone's like, you didn't call on me. And I'm like, it's mostly because I'm a horrible person. Or maybe just because I didn't notice. Or combination thereof. All right, so by applying the periodic inventory, know how to determine the method of inventory costing. So this is the chapter where we get into first in, first out, last in, first out, and average. And then of course, the specific identification method. So just be comfortable with doing that. What is that? I don't even know what the LIFO conformity rule requires. Can anybody tell us that? Brad's like knows all this stuff.
No, I had to look it up because that confused me. It's basically you can't switch the first in, first out, last in a bunch without having a reason or whatever.
Okay. I guess I never knew it was called that. Like, makes sense. You must conform. You will be assimilated.
Well, I don't think it calls it that in the book, but that's what I found online. So.
Okay, cool. Let's see. I'm curious now. I want to pull up the chapter 5 summary cheat sheet as we look at chapter 5, and let's see. Yeah, so this actually has a pretty good little summary of all of that as well. Let's see, let me go back to, oh yeah, there it is. So again, using the following table, be able to compute the effect of inventory errors on the gross profit. I think for my brain, this is some of the harder stuff because I have to like try to think through it like, okay, if my ending inventory is off, so here's their example, right? If our ending inventory is, well, I don't know what they're trying to show here. Okay, they're just giving us 2 examples.
Are they
Let's
2
see.
separate examples, or is it year 1, year 2? I couldn't figure that out.
Yeah, I don't think it's a very good example. And let me see with how the cheat sheet has it laid out. So this is almost maybe for your brain and for my brain definitely. This helps me more, just in without the numbers and just in like pure terms. So like if my ending inventory is going to be understated, then my cost of goods sold in the first year will be overstated and my net income will be understated. And then in the second year, those two things will be reversed, okay? Because it means I'll be starting that second year with those errors. So just seeing it to me with the arrows up and down, I think helps. It may, what's that little link do? So that may help more than this one for some people, just because these numbers, like, I guess I'm not sure. I guess we're saying that we overstated by 8,000. And therefore, yeah, I guess it is like year one and year two, because then in the next year, our gross profits are okay. So I don't think this one's great. It confuses me. Maybe if I had time to step through it or something. So I like the arrows that just, I can kind of, for my brain, I can just memorize the relationship between those and that will help me.
So Brother Fox,
Yeah.
I had a question about that. So there was in the chapter 5 quiz, there was one of the questions kind of asked about this, and it was like over 3 years, you know, here's these different errors that happened. And so when we're looking at it and it's saying if an error happens here, this is the effect to this year, but does that not continue to carry? Because it's only telling us it affects these 2 years, but if it doesn't get corrected, wouldn't that just perpetuate farther, or does it only affect those 2 years?
So it will only affect those 2 years.
Okay.
Assuming, well, so, you know, the assumption is that it's going to, that inventory will be sold in the following year. Okay. So we'll be off like in the first year, and then the difference will be made out. Now, I suppose in theory, if our inventory carried forward or something like that, or it was a business that didn't sell much inventory. But the idea is like, if our ending inventory was off in the first year, by the end of the second year, it should correct out.
Okay.
I don't know if that
Because,
was
you know,
very
because
helpful.
they're saying if it's overstated, then it's going to be understated. And when it's understated, then, you know, because I'm like, well, because if we're now understated, isn't that, you know, so that's where I was kind of confused, because we're now saying that we're understated. So, but that's not an error of understatement. That just is like a correcting understatement.
Yes.
Okay. Okay.
I mean, but I mean, maybe I'll try to let me make a note and see if I can put something together on this, because it is confusing. Let's see.
I think that this stuff in particular was the most mind-boggling, like confusing for my brain.
Well, me too, because again, so my last business I owned, both businesses, my wife has, you know, she paints and I had a storage, and we don't have inventory, so we don't deal in it much. I grew up in a business with inventory, but I never had to, I was a kid, I didn't have to deal with the accounting side. And so like, again, even though you can understand something academically, if you don't work with it all the time, and that's why I don't want to just try to launch into it here, because I'm afraid I'll be more confusing. But I can try to make a video, because it's not something I work with regularly. It's more like something I learned in accounting class and then didn't use for 20 years, or rarely use. Anyway, so I'm going to move on from it, just because I don't want to.
No, that's fine.
Be more confusing. Know which inventory costing method best matches revenues with current costs. To me, that means the method that best matches how your inventory actually moves through your system. I'm not sure what answer they want from that.
So in the book, they were saying that last in, first out best matches current cost, because that matches what it currently costs to replace your inventory.
Okay, that makes sense. Okay, that's what they're looking for.
Yeah.
I was thinking what best matches actual cost, but current costs, yeah. So by going last in, first out, you're recording as your cost of goods sold what your most current costs
replacement
were.
cost.
Yeah, that makes sense. All right, so be able to compute cost of goods sold and ending inventory of a company by applying the following methods of inventory costing using the periodic system. So I will tell you that the test is pretty heavy in this. Okay, they want to make sure that you can do this backward and forward, so to speak, and figure out either with it. And a lot of times it's going to ask you just for the cost of goods sold or just for the ending inventory. So you've got to read it carefully and be
That,
like,
that was my question. They're going to ask you for the answer. They're not going to have a big fill in the blank thing like in the
correct,
quiz or whatever.
correct. It'll just be like, what's the ending inventory? You know, it'll tell you that, you know, it will give you their purchase, you know, their beginning inventory and their purchases, and then it'll ask for, you know, and sales, and then say, using first in, first out, what's their ending inventory, or using last in, first out, what's their cost of goods sold. So you've got to read it super careful to first know, am I looking for ending inventory, or am I looking for cost of goods sold? And to second know, which am I using, you know, first in, first out, or last in, first out, or weighted average. When I see people missing these, it's not because they don't know how to do it. Usually it's because they applied the wrong one. And it's super easy to do. Understand the meaning of FOB, so freight on board, origin or destination, and how to apply it to determine the ownership of inventory. So just remember that goods that are sold FOB origin, or sometimes they're called FOB seller or shipping point, or, you know, again, they're like synonymous terms. But anything that's sold FOB at the shipping point means that the ownership transfers when it's loaded on board the conveyance, whether it be a truck or an airplane or a train, at the shipping point. So if I'm the seller, as soon as I load that on the truck, I deduct it out of my inventory, and in theory, the buyer should add it to their inventory. Okay. And then FOB destination means I load it on the truck, but it remains in my inventory until it's received at the destination, at which point it would come out of the seller's inventory and be added to the buyer's inventory. I mean, I think the names can help. You know, one changes ownership at the origin or at the shipping point, and the other changes ownership at the destination. This really matters from a insurance and loss prevention viewpoint. You know, whose insurance is paying for it if the truck carrying it gets in an accident and all your Krispy Kreme donuts spill all over the road or whatever. But so just be aware of those. Let's see, and then they have all of these pictures in here with pumpkins, not pumpkins, pumpkins. All right. I think, okay, so these are just inventory examples, and for whatever reason, they're using pumpkins as the inventory. This isn't even a fall class. Okay, we should change them to something for spring, maybe chicks or Easter bunnies or something. Okay, so that's the review for exam 3. Like I said, it leans pretty heavily on understanding this stuff right here, the cost of goods sold and that. And then, like I said, up for chapter 4, there were several.
Sorry, can you go back to that last thing in chapter 5 with the pumpkins?
Sure.
In that, there is one thing. One of their numbers they got was 980 for the. Let's see, it's up there. Sorry, I can't see your.
I'm looking for a 980.
It's up. It's up there, kind of on the top right. Ending inventory, maybe.
908.
Yeah, that's the one. Sorry.
Okay.
So, is that just an average? Is that just an average that they got, that number? Or where did that come from?
let's see. So I'm not familiar with this document. So we've got our total cost. 270. Yeah, I'm not sure what they're trying to do. Well, I'm not sure with how this is all laid out. So they had I don't have a good answer for you, Brad.
Well, when I,
I'm just looking at it like first time right here, and I'm not
right,
seeing.
basically it seemed like if you divided the 3270 by 360, you got like 9 point something. So if you times it by
Is that it?
100, you got it. But I just was curious if there was a different route to get that.
Yeah. So 3270 divided by 360 gives, yeah. So 3270 divided by 360 gives us an average cost of 908.33. I just don't know why they showed this. Like this average column is confusing, and I'm wondering if maybe they meant to have 908 in it, and then 100, and the remaining 100 would have a total cost of $908, which would give us that $9.08. So that's confusing. I'm actually going to go back to the people who created this because I think maybe this is an error the way they have it set up here.
Well, I've been trying to figure it out, so it helps to hear you say that. So
Because really, I mean, when you're doing average cost, all you're doing is taking your total cost divided by your total number of units, and you get the average cost, and then you use that, you apply that to the number of units sold and the number of units still remaining in inventory. This is confusing to me.
well, I mean, I was just trying to figure out cost of goods sold, and it was confusing why they went that route. I guess was my confusion. So
Yeah, I agree. I'm sorry that I don't have a better answer. Okay, well, so as usual, I'm partially helpful, I guess. Sounds like about how I work as a father. I'm partially helpful at home. I intend to be helpful, but then, anyway. So any other things you'd like to maybe talk about or look at or cover before we finish up?
Oh, hi, Brother Fox.
Hi.
Sorry, I have a maybe out of it question, but I registered for managerial accounting. Do you by any chance know what textbook that is?
I don't. I never
Okay.
taught it for BYUI, and I don't know. I mean, I don't know. Try to think of where I could look, but
Okay, no
I
worries.
don't know.
And you don't know if they use the McGraw?
I know they weren't using it before, but I don't know if they've changed. It's been a couple years since I'd heard that it was like Cengage or someone, but I really don't know what it is now.
Okay, sorry. All right, thank you.
No, I wish I could be more helpful. So there you go. Instead of being partially helpful, I was not helpful at all. I'm I'm moving up in the world. Other questions that I can dodge or not answer at all. I will try my best to answer, and I could probably email someone who teaches accounting managerial to find out.
Thank you. So the ones that you told us that kind of are heavy on the tests, and I just practice a lot on those or review.
Yeah, I mean, not just those, but yeah, those are the ones that are heavy. So you're going to get your most, like all of us, we have a finite amount of time, and so try to focus our efforts on the ones that give us the best overall result is good. But I notice a lot of people miss questions just on what would be like terminology, right? Like where they'll just ask you, which of the following is not a a quick asset or something like that. And it's like, oh, I studied all of this math and then they're asking me for terms. And so that's another thing that some of these little basics they have where they're just like giving you terms can be really helpful.
All right. Thank you, Brother Fox.
All right, everybody. Well, then if there's no other questions, I do have another class to get to in about 10 minutes. So I don't mind finishing a few minutes early. Any last questions or thoughts before we have a closing prayer?
I guess I have a question about the chapters the chapter that we're covering after the test tomorrow, right? We have till tomorrow to take the test. Is that a big chapter? Are we going to be okay? Allocate all of Saturday to get those projects done?
Yeah, I think so. I mean, I
Chapter 7.
right. I thought that I had a little recorded video. I might do a little recorded summary of chapter 7. I thought I had one in here, but I just have a couple of the quiz access. There's 4 of the quiz access problems in here, so make sure you use that to get started.
Right, that tells me they might be hard, and get ready.
Let's see, chapter 7. See, don't get ahead of yourself, Marta. You got to focus on the exam.
Well, I'm not going to get you back until next Tuesday, so
anyway. No, I mean, so personally, like, I don't find chapter 7 to be a particularly difficult chapter. Like, I don't, and my experience has told me that students don't struggle with it more than, the most brutal one is that chapter with like adjusting entries. That's the one that seems like it really gets everybody pretty hard. And so this one's more like regular hard instead of like extra crispy hard or whatever you'd call it.
like that one shut me down and knocked me down, and I'm happy with a B now. Okay, fine. I'll just take my B+. I'm fine with it.
Yeah. Some chapters beat you up and take your lunch money. Anyway, that was my whole experience. All right. Well, we better finish up. And can I get a volunteer for a closing prayer?
I can say it.
That'd be awesome. Thank you, Brad.
Our dear Heavenly Father, we're so grateful for this chance to meet together and learn more about accounting and how we can use it in our lives. And we ask you to please bless those in our class, that they might be able to remember what they've learned and use it and apply it on the exam. We're grateful for our instructors and the sacrifices they make for us, and they're good examples. And we say these things in the name of Jesus Christ. Amen.
Amen. Thanks very much, everybody. Have a great night. Good luck. You could do this.
Thank you.
All right.
Thank you.